Good morning, everybody. Welcome to the Flow Show. Hope everyone's doing fine and dandy this fine morning. How you doing, Kate?
Morning, mate. Morning, everybody. I wasn't being rude, but I can only talk to hosts and panelists on the chat. So you guys will have to do it without me today. If anyone asks a question, I should straight away reply. But yeah, all good, mate. Entering the final straight of the end of month and quarter, and seems the dollar is liking it.
Yeah, seems that way. Yeah, bit of a bid coming in again this morning. Have you clicked the everyone or the bit where it says host and panelists, and do you get the option?
No, I don't have the option to everyone. Why don't you crack on and I just go out and back in?
Okay, mate. Yeah, I'll crack on. You can hop out, hop back in again, perhaps. Right. Speaking of cracking on, China's state banks have been in selling dollars overnight, though you wouldn't thunk it, given the price action. Their efforts to slow this weakness in the yuan is not producing the same fruit as it did before. Pretty much non-existent, the price move, although obviously they're in dollar China, which it's a bit more prevalent there. The moves we've seen, but still it's not any great guns, the likes of which we've seen before, which tends to have a bigger reaction when they come in and sell dollars against their currency. So maybe they're fighting a losing battle at the moment, or not ready to commit to going hammer and tong at it. As you can see, we're not dipping far at all at the moment, still hovering around that 732, which looks a bit of a potential watershed line. If we get above that, we might be heading back up towards those highs. But at the moment, they're throwing, they're using a water pistol to put out a house fire at the moment. Over in Japan, the usual waffle from Finance Minister Suzuki, watching FX with a strong sense of urgency, blah, blah, blah. Looks like they're up to daily jawboning for now. Japanese cabinet official said that Ueda told a top economic council meeting it was important to nurture positive signs of change in corporate behaviour. And that was something that appeared in the minutes that were released overnight. This is for the July meeting, not the one just gone. The usual story, many members said that hitting the price target was not yet in sight. But reading through the minutes, there was a bit more bullishness about the corporate wages, jobs picture. Some members expressed the view that many corporate executives have started to voice the need for wage hikes in view of recruitment and retention of employees. And that positive developments had been seen in the income environment. And on this basis, a few members pointed out that some firms had promised wage hikes, not only for a single fiscal year, but also for the period beyond. Another member, BOJ member, noted that the number of people who left their jobs voluntarily in pursuit of higher wages had increased. So a bit of a positive spiral developing regarding the wage picture over there. It's giving people more confidence to move up jobs, look for higher jobs. That's going to create a bit of a spiral up in wages, because if people are offering higher wages, people are going to go for those jobs. So it's all slowly, the snowball keeps rolling. There were also some comments in there about the fact that inflation hadn't really pulled back as expected, and that the conditions for that to happen were perhaps waning, and perhaps more recognition that prices may be stickier than they anticipated. Again, just a bit more on that snowball rolling further towards the end of the year to see whether prices do remain stable at a level that will force them to come out of the easing cycle. But Yeah, just some comments. They are obviously lagging there for the meeting before the one we've just had, so a bit behind, but still I'm getting a little bit of a more positive bullish sentiment from those minutes than we had previously. Over to Kishida, and apparently he's going to create a tax break for domestic investments in strategic areas, and those areas are the likes of batteries, electronic vehicles and semiconductors. No shock there about those components and sectors he's targeting, but yeah, tax breaks could get some investment coming in. Over in good old Ausland, well, we'll get to Ausland in a minute. No, we'll start there since it's top of the calendar. CPI year on year went up in August, 5.2%, as expected. But yet again, that's another country seeing higher inflation numbers. You can see it's becoming a bit of a trend globally that we're seeing higher CPI numbers dribbling in to various countries. Need to know whether it's an actual trend in higher inflation or just some one-off effects, but it's something that we need to keep an eye on, because it could be something that pushes central banks more hawkish again, and maybe even some of them looking to raise rates again. As I was saying, in Japan, we also had a few bits of data out. Leading indicator coming in not as soft as expected, down 0.6% month on month. The actual index itself losing a bit but beating expectations. Coming over to France, and just keep an eye on these consumer confidence numbers for September came in at 83 versus 84 expected. Where is it? There, down 2 pips from the 85. That German number was a little bit softer than expected as well, down 26.5 versus minus 26 expected, worse than the 25.6 previously. So we're not seeing overly good news for the consumer. Meanwhile, in Germany, Volkswagen is halting or slowing production at 2 of its German sites. The headlines say due to cratering demand. Again, that's the car sector in Germany, which is a huge part of their export and their business all over. So not doing well in that sector. Cratering demand, again, points to a weaker consumer. Now, this might just be a bit of a blow off, because obviously a lot of people switching to newer vehicles, getting in before restrictions on, certain towns and cities imposing carbon restrictions like the UK ULEZ, which has forced a lot of people to rush into buying compliant cars. So it may just be a bit of a, as I say, a pullback of that demand ebbing, but otherwise it's not looking good on that front. Over in France, big retailer Carrefour says it will sell fuel at cost price in France from this Friday onwards until the end of the year. Macron has been talking about putting in measures to limit price rises for fuel. Obviously, oil going up, that's one of the quick impacts you'll see from that into petrol prices and the like. So they're putting measures in place to try and limit the impact to the consumer. Obviously, that impact is on inflation as well. Hawke Holtzman, they've sent out the hawks over the last couple of days. Hawke Holtzman, one of the first, and it's unclear whether we're at peak rate yet. Upside inflation risks are still out there and can't exclude further rate hikes. ECB's Elderson also out saying ECB rates haven't necessarily peaked. Coming back, I haven't got it up because I'm a bit slow this morning. Yesterday's data we had coming out. Now, we had the Philly Fed services numbers out, which is never on a calendar. No idea why not, but it was out a little bit softer, coming in at minus 16.6 versus minus 13.1 prior. Around the components, new orders was down, but not as bad as in August. Prices paid dipped back a little bit. Prices received dropped back some as well. Jobs dipped a little bit to 6.4 from 8.1, but wages and benefit index went up to 40.3 from 33.7. So some wage pressures coming in to that services area. We'll see if that translates into some of the main data like the ISM to come. House prices as well, nothing really to write home about. There was a little bit of an uplift. Had seen them sort of dribbling a bit softer of late. But as you can see there, coming in positive numbers, 0.6% on the month on the 20 city, 0.9%. F.A.C.E as well, you can see there on the month, ticking up 0.8% year on year, 4.6%, so a little bit higher there. The Case-Shiller national prices went up 1% versus minus 0.2% previously, so a little bit hot on the year there. But nothing we need to write home about. Then we've got the good old consumer confidence, which softened more than expected to 103 versus 105.5 prior. But the details underneath were a little bit mixed. Current conditions rose to 147.1 versus 146.7 previously. But expectations fell to 73.7 from 83.3, so one up, one down. 1 year CPI stayed unchanged, only by a little bit of accounting smoke and mirrors. It was unchanged at 5.7%, only because the prior 5.8% was revised down to 5.7%. But still running a little bit on the hot side compared to what we've seen in the Michigan survey as well. So overall, a little bit softer on that data, but still some things that suggest that nothing's collapsing just yet. Fed's cash and carry was out yesterday with Peace, saying he puts a 60% probability on a soft landing and a 40% probability on a scenario where the Fed will have to raise rates significantly higher to beat inflation. That means there's a 60% chance that they don't, but that's not what the press decided to focus on. Shows you how they like to spin things. Costco, another retailer in the US, said sales of big ticket discretionary items are still weak. This was coming after their latest earnings numbers, and that inflation pressures have been trending down. Over in the political front, Democratic leader Schumer said we are very close to finishing our work on a stopgap government spending bill. The short-term spending bill would fund the US government through to November 17th, according to Punchbowl. So a very short can kick, just over a month. They're going to try and kick this can. So if they get it done and dusted by Saturday or early next week, then we do it all again in November. Happy days. All looking forward to that one. Okay, you all sorted?
Yeah, I'm back. It only lasted for about 30 seconds. So I was back a minute later, mate. I heard everything you said.
Cool. Anything you want to pick the bones out of in that lot?
Yeah. Well, it's the Bank of Japan. Those minutes, they are from the July meeting, right? And we've had in the meantime that your Yomiuri article, where they had an interview with Ueda. But then in the meantime, he's already come back. Well, not really pushed back against it, but cautioned against too rapid moves. I'm really of the view of just leaving that behind and see where we go from here. The thing is as well, they're talking about those prices and wages, but if you look at the real wages, they are still not really going up because they barely cover the inflation. So I think we need to be a bit cautious with attaching too much importance to that report. But it is a fact, and we have seen it as well, and we've said it as well. And actually, they talked about it as well, that prices are going up, and likely into the end of this year or next year we may see more moves. But as we've seen, there's been very little reaction on the yen side after those minutes came out, right? On the other thing that I would like to mention is I just saw an article because we're seeing like dollar CNH ticking up a little bit here. See an article about half an hour or an hour ago saying that Japan's Mitsubishi Motors is to end production in China. They only had one plant, but it's just that another little stab into China's possible recovery, you know, and we've seen other companies. Yesterday, I think the U.S. companies were complaining that doing business in China is getting tougher and tougher. I don't think that they're at the end of their misery yet, and it's really only the PBOC who is keeping a lid on this dollar China right now, stubbornly fixing it lower. Even though the rest of the dollars have been going up, they're still very stubborn and use their buffer, counter-cyclical buffer stuff to fix it artificially, the CNY artificially strong. So yeah, but there's a bit of a there's still a risk, and for me it's still too early to buy China, although I've been thinking about it and looking at those measures, and if they succeed to turn the ship around, then Chinese yuan could start to strengthen. But for now, I'm still not buying because there's still companies going out and complaining. So I don't buy the story yet. We are trading again slightly above that 2% dollar CNY band. Yeah, I don't buy the Chinese story yet. For as long as I see companies moving out of China, you know.
Yeah, no, I agree with that, mate. Yeah, the BOJ stuff is a bit behind, but it was just interesting reading through, just getting the sentiment. You know, we don't get that level of detail from the announcements and pressers and all the rest of the headlines that the speakers that may come out in Parliament and whatnot. Yeah, but I think it's going to be interesting what the next minutes say, whether they've gone backwards on that or they see further signs of heading in the right direction. Let's call it that.
Yeah, we have to know that all those texts are really very, very carefully written, like all the central banks right now, because we are at a possible inflection point, but usually already in Japan, and a lot of it is repeating what they said on prior meetings. But it is true, and it's a fact that we've been saying that a lot, that they are somewhere on the move, but. The problem with the Bank of Japan versus Japanese yen is the speed of the move, which is, let's say, snail's pace. A snail will still win the race, right? So
yeah, exactly. Very slow, but gives us something to trade anyway when we get into those meetings. If the market gets a little bit hawkish over it. Anyway, let's move on from that. Where should we go? Let's go to euro dollar, because that's really getting to some interesting levels now. I'm just going to show this chart. This is the main chart I'm looking at right now. Not a lot on it. Let's go to a weekly. There's one level I'm looking at down here, and this is the 105 level. And you can see why that's the case. It is a huge historical level. There's always something happening when we get to this level. We've been far enough away from it that we're likely to see something happening again this time. And we're only 50 pips off, and we're in the midst of a bout of dollar buying, potentially month-end related. So the question probably has to be asked is it justified for the euro to be down this low based on the fundamentals, or is this just month-end coming into play? And we're just seeing this dollar bid dragging the price down. Either way, I'm probably building it up into a level that will probably just carve through now. I've made a big thing of it, but you know, these are the big levels I always like to look at. You know, it's almost a given. You've got to have a go at these levels sometimes. They're that big, but I will always judge the move on its merits at the time. I'm not just going to blindly buy it because it's a big level. We know the pressures facing central banks at the moment, particularly the dollar, the US, the Fed, higher for longer. Market seeing as those rates staying higher than the ECB, maybe economy suffering more in the Eurozone than the US. So that's naturally bearish for euro dollar. But, you know, we have got this month-end call trend going on, and we know that there's flows into the dollar. So if we get a move down here over the fixes, over today's fix, which is value day, the end of month, then I'm going to be pretty interested in having a little tap on that. I might play some for a little short-term trade just to get a first test bounce, perhaps something like that, and then maybe see if I can hold on to some and see where it goes, depending on where we see the week. I won't rule out that we could bust through it on this month-end stuff, because that's the way of flows, but then I'll look at it on a closing basis this week. Have we closed below? If we close below, that changes the picture somewhat. If we dip below, you know, 80s, 70s, but get back up into the end of the week, then you can likely put it down to month-end stuff and then maybe make a decision. But either way, it's a big level. I don't come around that often. It's the beginning of the year, the last time we were down here. Before then, it was way back in May 2022, and then before then, you know, 2017, if you just ignore that one, the 106s. So they don't come around often, and you've got to have a look at them when they do. So that's the main level I'm looking at for euro dollar right now. As for the rest, dollar CAD's inching back up. It's got its nose above 135 now and looking like it's trying to build on that. As you can see there, we've had the little move above, the pull back to the level. Now it's moving on up again. 135.5 is the next level for me up here. And then things might get juicy as we start to get up towards the high 135s, maybe even into 136. So this is potentially another trade I'm going to be looking at. Fancy the short side on this one. If we get into that 136s, maybe again on these month-end flows. It's a bit of a similar picture all round, isn't it, Kay? You know, we're getting this dollar strength, but you don't know whether to trust it or not, do you?
Well, I mean, okay, we've been saying that, and then at the end of last week and start of this week, I think I've mentioned it a few times. I think this may be, and then with a question mark after the final rush into the dollar week, and it was expected. It is month-end, quarter-end. Everything points at dollar buying as well, and the models are saying so. The move in the yields are saying so. The move in the S&P in the stock markets are saying so. And why fight it? But as I also said, we could be in this week printing a peak in the dollar, and I'm going to be very interested come tomorrow, Friday, because sometimes it's a bit of a mess at the end of the month or a quarter. And I've noticed already that several months we are doing the models are right until the day before the month end, and then the last day all the front runners are still in the market and they have to go the other way around. So it's a bit of a we got to be careful, trade with the clock in our hands rather than charts at sometimes. But yeah, your levels are there. 105, 104.5 is a big one on the euro dollar. I do think that how shall I say, the central banks, I don't know, there is a big divergence to be had now between, for instance, ECB and the Fed, but the data have been pretty not awful, but weaker in the Eurozone than the US. But yet I think that if you get a print before the end of the week well under 105, it's probably worth having a look at. Well, I'm going to, for certain, try to have a look at perhaps catching a knife. There's another one, a couple of other ones as well, who are now starting to move in that direction as well. And we've seen, especially the Kiwi, for instance, being quite strong over the past weeks or sessions. We've had this big dollar move, but then it was holding very well. Testimony as well is the Aussie Kiwi being quite a bit lower. and that's perhaps another one who can, after the end of the week, dollar buying drop. They could be in for a little bit of a reversal. And the other one is I'm still in there and still thinking we may print a low there as well. In it's going to be cable, right? How much bad stuff can you trade? That's going to be the question now. But we have come some way in the cable, and I'm thinking if we have this acceleration down to below 121 into that 38.2, or then the big 120 psychological level, I did this. It may be just enough right for now. That is my kind of feeling for into this month end, and then the start perhaps of next month. And then of course we have to talk about the yen, which is being very closely monitored by the MOF right now. And if you look at the models, they are looking for yen selling. So you could see this acceleration just driven by flows in the dollar yen or some yen crosses, and that's going to be a very interesting watch as well into the end of the month. So yeah, there's a few things that we are going to start to watch. I still think that we are going to see that little rush on the dollar because there's very little to counter it right now. If you look at okay, the stocks rebounding just that bit, but it's not really. We are still, like, for instance, the S&P below 4,300. The DAX is still hanging around roughly the lows of the past month or so. Let me just yeah, they're still hanging around those lows, right? So there's little to really take it the other side, but it could be that just the clock and the end of the flows are going to create a little bit of a vacuum come the end of the month to the other side. So I'm getting ready to take what there is on long dollars and starting to look for the other side gradually. But yeah, again, I'm as people know, I'm trading with the clock in my hand on month ends, right?
Yeah, I think it's a case of you. Again, like we always say, when you're going into big events, central bank events, which way the market is leaning, and the market is leaning with a dollar bullish bias. So the month end going the same way is just pushing in an open door. Really, it's going with the flow. If we had seen a lot of dollar weakness coming into this week, and then suddenly you get dollar strength, you'd probably be looking at the other side to maybe fade the end of month strength. But that's not really been the case. The dollar's been strong. I was looking at this morning just some of the longer term charts. Even since the beginning of September, cable's lost some 550 pips. Euro dollar 360 odd pips. So those trends have been in play all month. So it's not just a one-off thing, but how far further can it go? So yeah, judging it, looking back at dollar CAD, and one of the indicators you can tell what the driving force is it the fundamentals, whatever is, look at it compared to oil. Oil's back on the bid side, going up again, and dollar CAD isn't going down, so the CAD isn't gaining. So that's all. I know this has been on and off the oil bus of late, but it gives you an idea what the driver is at any one time. So dollar CAD going up, CAD weakening while oil's going up isn't usually the way it goes. So that gives you a sense that what's influencing dollar CAD for the moment is on the dollar side rather than the CAD side. Hence why if oil remains well bid and dollar CAD moves up and it's month end stuff, why I'm looking at the short side for that one. So pick your battlegrounds, see what's moving, what might be going against the recent trends and whatnot, and that's where you might get your opportunities. Euro sterling, it's really, again, this is just being pulled around a bit by the difference between cable and euro dollar. I don't see real fundamental reasons why this should go any particular way massively at all. it has been going that way because of the Bank of England. You know, they've stopped rates, they've paused rates, and things might be a bit worse there than the Eurozone. You know, I get that difference in the price here, but we're not getting through that 87.20, and that's pretty significant, but we're not dipping back. So I've already taken some more profit on my longs up here, because you know, you've got to respect the price action. We're not pushing higher. If we can't get back above this line, or if we can't have a crack at going above this line, then most likely after this week's rolled off, we're probably going to head back a bit lower. How low we go is anyone's guess. But that's why it's always worth taking some money off when you get the profit on the table, so that if it does pull back, at least you say you've got something. I'm not too worried about it, because obviously I'm long down at the 85, so got plenty in the trade at the moment. But I would be a little bit cautious. I may even try a little separate short if we tap up this over the fixes or this month in stuff, just to maybe play the line, see if it holds, take some money on the other side. Kay, did you want to have a look at a couple as well? I know you've been looking at the stocky as well because of.
Yeah, we just need to mention it because the Riksbank is probably now started to sell currencies versus Swedish kroner. They've said that they would do it over a period of what is it, 4 or even no 6 or 12 months. But it did scare the short stocky traders in the meantime, and they are already on it, in my opinion, and we've seen a pretty fierce, since the Riksbank meeting, a pretty fierce setback here in Euro stocky and all currencies versus the stocky. So we have to be a bit careful here. They may do more until the end of this month. It does look like it when I read around. But I think if we get like a bigger setback here, for instance, around this in the 1130s or so, that may be over. Because if we look really at the amounts that they are throwing at it, if you spread it over 12 months time, it's not a very big amount. It would come to an equivalent of around 55-60 million euros a day, which is easily absorbed by any speculative flow or whatever. But if there's no reason to really be short stocky right now, if the economy does not further deteriorate, it may be that we are in for a little bit of a break here and a move back down into those 1130s, right? So keep an eye on what's happening. It is pretty strong right now. Well, strong, relatively strong to what happened the past months and weeks. So and we think it's clear that it has to do with those Riksbank hedging, as they call it, their foreign reserves. They say it's not intervention, but it pretty damn looks like one. So yeah, keep an eye on that stocky. You've already spoken about most of the currencies. I think there's a chance, for as long as now we stay below, call it 122, there's a chance we are going to have a look in this 120.60-80 zone on the cable before the month is over. It is the side as well of what the models are showing us on the month end. It is also the side of what was happening already before. So I wouldn't be surprised if we see this last leg lower. Where it's going to take us, really, I mean, it could be here, but it could also be that we are ending the month close to 120. But again, keep your stopwatch or your clock very close to you and monitor what's happening around fixings, especially the 4 p.m. London fixings. Okay, euro, I'm a little bit in the same thing. I thought it was going to be weaker. Traded it a bit in that side as well, but how far can this go? It is clear now, since we've broken under this 106.10.15, that also technically it's looking weak. and we cannot fight the flows, as Angela was already saying, and it's a very true truth, Angela. Well said. Where can we go again? Is it going to stop at 105? Is it going to stop at 104.5? I don't know, but it does look like it could be the last leg if it really goes down on the month-end fixings. That's the feeling I'm starting to get. Okay. Aussie, we are getting closer and closer to those prior lows again. There may be a bit of just natural washout if we get down there, but I'd say if we get anywhere close to 63, 62.90, which is also a prior low here around 62.75. Call it 62.75 figure. That may be enough at the end of the month. I'm not standing in front of it right now. And then there's this one here, because this one has been behaving relatively well through the whole of September. And this could just be the end of month setback. If I'm seeing levels somewhere in those mid 58s into the month end, I might get tempted to catch a knife here as well, because the Kiwi has been behaving pretty well. Gold and silver are also finally feeling some heat, and yields. The dollar, don't go look too much further. And although nobody is ever talking about month-end fixings or so, but I've noticed that month-ends could actually see some moves on metals as well. I'm not a specialist on the contracts or whatever, but we have to note that gold is trading below 1900. 1885 is your next leg. See where this ends up. Come tomorrow or Friday. It's going to be an interesting one, and again, I don't see too much of a reason for it to go much lower unless China and Russia or whatever stop buying gold. But it could be just a month-end move. The other one that I'm keeping a very close eye on for adds to my long-term position is this 22.25, 22.5 zone on silver. Again, I'm trading with the clock in my hand, so this is. It depends where we are tomorrow and on Friday. If we actually are above this tomorrow and on Friday, I may just press the button wherever we are for a rebound into October. And if we are trading below anywhere 22.25, I'm for sure starting to add on very, very small slices. It's usually the way that I do it around my long-term core. And that is, that's about it for me. Yeah, oil, I don't know what's happening there, AJ. Yeah, on the dollar yen, it's all about 150 right now. Are they going to come in? Are they going to defend it? Are we just going to get more jawboning? But it's undeniable that the yen is offered right into month end, and really, if you look at how equities have moved and stuff, I'm not surprised the models are calling for a weak yen into month end. Sell limit on dollar yen, yeah, Brand, but again, when are you going to do it? And if they come in the meantime, they are putting it 400 or 500 points lower, everybody's going to moan because they're too late. But if you start to sell here and they don't come in before month end, you can find yourself at 150.5 and come tomorrow or Friday and you're looking at 100 points loss. I'm trading around my option. I'm happy. Got my 148.5. It's already paid back with my premium is paid back. It can go up and down now for me. That's fine. I just saying that if we do get into those higher levels, are probably going to be fully hedged and see what happens start of October there. I think there is a chance that they may step in because of the daily comment that they have. Also, looking at one thing that was interesting though in those minutes, Ryan, is that the minutes said that dollar yen was relatively stable, but euro yen was going up against euro was going up. So that means that they do not only watch the dollar. So we are right in the assumption that they are watching some kind of an index and other currencies as well, apart from the dollar. So I'm happy to know that we didn't hit the ball too wrong there.
We never do that.
Yeah. So yeah, I think it's going to be a grind higher into month end unless they intervene. That's it, basically. And that's it for me, mate. Back over to you.
Thank you very much, mate. Just going to jump back quickly to gold. Ali's asking about gold. He's doing a little bit of scalping around there. I've actually just picked up a little bit, 1895 and change. I'm just going to try this level down here. We've got this old fib down here, which is also an actual been a natural support and resistance area. Then we've got that 1885 that I've been waiting for forever. So I'm just going to give this a little go down here. I'm going to start at this 95 area and I'll add a bit more into 85. If we busted that, likely below 70 or even below 80, I'll probably fold it up. But I'm giving that a go here. So you can have your short, Ali, at 92. You're not far away. You can have that, and then I'll take over on the long side, and we'll see if we can run it up a bit. But that's what I'm looking at on there. Right, I don't think there's an awful lot out today on the calendar front. We've got durable goods out today, which again, keep an eye on. It's been a little bit volatile of late, so it has a tendency to be like that now and again. Sometimes you get 0 point this, 0 point that, and suddenly you get a whopping 5 point whatever. So we're not expecting much, down 0.5% from the main durable goods orders number. But look at some of the core numbers that strip out the big ticket items, aircraft, defence and that lot, just to see what happens on the consumer side of things, if there's any weakness there. But apart from that, not a lot to be going on. So keep an eye on the FIX later on, the London FIX, 4 p.m. UK time. That's when all the action might start happening. Probably a good 30 minutes, maybe 40 minutes before you might start to see it. That's what usually happens these days. You start to see the moves, and then the FIX either accelerates that or everyone's done. So keep an eye on the clock later on this afternoon. Don't forget, tomorrow, both myself and K-Man are not here. We're heading uptown. So there's no flow show tomorrow. Mark that in your diaries. We'll be back Friday morning, if we're not too hungover. Yeah, we'll be back Friday. But just keep that in mind for tomorrow. Have a great day today. Hope you get lots of pips. And we'll see you all tomorrow. Thanks a lot.
Trade safely, guys. Have a good day.